Retail is dominating the earnings story this week, with Home Depot, Lowe's, Walmart, and Target all reporting in the coming days. Joining us this morning is Evercore analyst Greg Melich, who has some thoughts on at least some of them today. Greg, good to see you. Thanks for joining us.
Hey, Carl, great to be here.
Target's a really interesting debate. We had a downgrade on Friday to sell, but today you added to tactical outperform. Can you talk about why?
Yeah, we just think that it needs to be pretty negative for the stock to go down this week. The stock has underperformed massively this year, down over 20%. The company just lowered its guidance for the full year back in May. And while we think sales are running negative, maybe 2 or 3% in the quarter and into the summer, I don't think it's enough for them to lower their guidance again. So we just think it's more likely to go up than down when they report earnings on Wednesday.
Right. In general, do you think we're going to get enough color on inventory management that we'll get a sense of where the inflation pass-through is coming through on tariffs?
We're in this middle of we think is a real air pocket, right? So the tariffs flowing through into inventory, and then into final average unit retail volumes and prices. This is this price elasticity equation that we're going through as a whole consumer society right now. Yes. So I don't think we're there yet. We need to see all of back to school to find out how clean inventories are or aren't. And frankly, the winning retailers are the ones that get it right, that realize, all right, if the price is going up 10% here, the units need to come down 5 or 10% as well.
Right. What's your general take on Walmart going into their print?
We like Walmart. So Walmart and Home Depot are both in our top 5 portfolio. Those are the 2 reporting this week that we do like and as our top names. We think Walmart had a perfectly good second quarter. We think they'll remain relatively conservative and try not to flow too much of that through into their full year guidance. And we think what Walmart is really doing is they're driving it with traffic growth, and they're doing it with a new middle and higher income consumer that's shopping them more often and more frequently. That Walmart Plus membership, we think, is up to 18 million households, with 75% of the growth year over year coming from higher income households. I think that's really where Walmart's winning.
How does the changing immigration picture impact these retailers' ability to attract a labor force, ability to retain a labor force, and just overall wages that they're paying people?
Well, we've had a lot of wage inflation in retail over the last few years. That has come down to what's probably now 3 to 4%. I would say, regardless of how the immigration side plays out, the fact of the matter is retailers need to hire good people, and they want to keep those people, especially those that are the most productive. And so I don't see a whole lot of deceleration in that wage inflation in retail. We're hearing that they are able to get people still and get the people they need into this year. So we haven't heard that as a real problem.
We just had a discussion about the home builders. When it comes to home improvement, I mean, we always kind of talk about Lowe's as the bridesmaid to Depot, but in fact, you do have a hold on Lowe's and a buy on Depot, right?
Yes, we do. And the main reason for that is we think Home Depot, with their exposure to pro, which is over half their sales, Lowe's is under 30%. We do think that the consumer is cautious, but they are willing to do stuff that needs to be done on their homes. We have an aging housing fleet, as we just heard from your prior guest. And at the end of the day, it does need to be maintained and fixed. And so after a 2.5, 3-year downturn in home improvement, we do think home improvement is getting better. Not massively. There's no big recovery here, but we do think there's some modest improvement to slight growth this year in home improvement. And Home Depot, we think, is the better way to play it.
If we see declining mortgage rates, does that usually coincide with HELOC rates as well? In other words, is there any kind of correlation between people's willingness to do the home improvement versus just buy a different home depending on where those rates are?
A great question. You jumped right on it. Our home improvement lead indicator, which helps us predict what home improvement demand will be in 6 months, is muddled around at just positive 1%. 30-year mortgage rates, we find, are actually more important than shorter-term HELOC rates in terms of our indicator. That said, for remodels, which are specifically about maybe 25, 30% of the home improvement market, then HELOCs start to matter more. So the bottom line is if we get a couple Fed rate cuts, we do think that could help the HELOC market a little more than it would necessarily help the mortgage market. What we care about in home improvement is obviously maintaining the homes we already have, not building them. So getting some short-term reduction, any reduction rates would be good, but I think in the short term could end up helping us a little bit more than people think.
You know, the pain and specialty, I mean, I guess pain's the wrong word, but certainly pressure out of TPR last week and from RL. We know about Under Armour. We've spent a lot of time on Lulu's valuation. You think that says something about names that we might get this week that maybe aren't as specialty but still get close?
It's a great question. Retail's a $5 trillion market, and I think you really have to look at, a home improvement market of $500 billion or a grocery market of $1 trillion very separately, or auto parts at maybe $150 billion. And I think what we're going to learn this week is how different parts of consumer retail have been able to handle the tariff pressures and get through them. And I would say home improvement is on the better side of that. And that's why we do like owning some names there. Again, Home Depot, our favorite. We also like Sherwin-Williams, because you want that pricing power. To the extent that you can't mitigate tariffs, you want to be able to pass through a need-based product. And we think Home Depot can do that. So I would be careful about taking any one specialty retailer and ascribing that to the rest of them, because it is very category specific.
Right. Yeah, there's definitely a ladder on the pricing power, as you said. It's going to be a fascinating week. One of our favorite parts of earnings season, Greg. Good to talk to you. Thanks. Greg Melich over at Evercore.